Thank you very much for joining us here on Urban Debate on Mirror Now. I am Hina Gambhir. Is Indian rupee all set to cross 80 against the dollar? What does it mean for Indian economy? Why is Indian rupee falling against the dollar? Should you be worried? Well, that's our big focus on Urban Debate tonight, as Indian rupee today closed at an all-time low of 78.05 against the dollar, after hitting a historic level of 78.29 against the dollar. It's good news for exporters, bad news for importers. The reasons are many: rising oil price, high inflation, rate hike in the US and other parts of the world. But for someone planning to travel abroad, for someone planning to study abroad, for someone planning to travel to a foreign country for some medical treatment, this weakening rupee is not a good news, as all this is going to get expensive. So should you delay your plans? Or is this weakness in the rupee that we are seeing, in the Indian currency that we are seeing, temporary? Let's try and find out on Urban Debate on Mirror Now this evening. Dr. Rao, let me begin this discussion with you. Simple question. Rupee is getting weak against the dollar. What does it mean for people in this country? What does it mean for Indian economy?
Rupee weakening against the dollar is it's not it's an effect of something else. The effect of, your balance of trade, and it's an effect of your, foreign institutional investors taking the money out. And obviously, when you have this type of a situation and your fiscal numbers are not very good, your macro numbers are not very good, on top of it, your balance of trade is pretty bad. And in fact, in May, you had the negative balance of trade of something like $23.3 billion. And then this has continued to be the case. Obviously, the imports are much more than the exports, and particularly the oil price increase has been a major factor. And there are also a number of other things like fertilizer or edible oils and various other things. So obviously in this situation, weakening rupees, cannot be avoided. And nor is it appropriate for us to prevent the weakening of the rupee, because at the end of the day, you need to balance the trade and ensure that your current account deficit does not go out of hand.
But Dr. M. Govinda Rao, does it mean that if this weakness continues for some more time, inflation level will further go up? Today, of course, we've got some decent news as far as inflation is concerned. In the month of May, it eased slightly the retail inflation to 7.04%. It did not breach the 8% mark, thankfully. But if the current situation continues, do you see inflation further rising in the country because of this? Because the companies that are importing products from outside, importing raw materials from outside, they'll have to pay back in dollars. Would it then not mean for us consumers, the products, the imported products specifically in India will also get expensive, eventually leading to higher inflation?
Well, we are faced with the Hobson's choice, in the sense that any depreciation would have its impact on the price level, depending on how much of import that you are going to do. But at the same time, if you don't, adjust your exchange rate to the market, then obviously your current account deficit will go up. Your trade deficit will go up. The major reason why we have today this type of a situation is, I still do not, I'm not very convinced that the interest rate differential is all that a major thing, because even if you see April outflow, it was the outflow of dollars from the foreign institutional investors. It was just about 2.36 billion, whereas your trade deficit in May was almost 24 billion. So it is an important factor, but at this particular moment of time, it is important even otherwise. To begin with, we had an overvalued exchange rate. Over a period of time, they have been protecting the exchange rate, but sort of over a period of time, we have got to adjust it to the inflation, because you can't afford to have, as it is estimated that we are going to have a current account deficit of more than 3%. So we can't afford to have that sort of a situation. We need to really make our system more competitive. Exporters, obviously, falling rupee will help the exporters. And, you need to, sort of ensure that there are adequate exports. And therefore, we need to really have that. It would have some impact on inflation, but at the end of the day, you need to see the total effect of everything. And then obviously, may adjust your exchange
Dr.
rate.
Rao, when you say we, in any case, had an overvalued exchange rate, what should be the correct level of rupee? Is there any way to predict it? Is there, should RBI have a level of rupee that it should maintain against the dollar? Does RBI have such a level that it always keeps an eye on? Because we have seen Reserve Bank of India intervening as well many a times.
Absolutely. Every central bank has to have a look at things. But then there are global uncertainties, as was told by all others. Obviously, we didn't expect that, so Russia will invade Ukraine and there will be massive disruption in the availability of oil. And, both because of the Russian invasion and the sanctions that are given. And, thankfully, in one sense, which is not a good news, but, China is not really demanding so much of oil because of the lockdown still. But if it goes up, if China relaxes its lockdown, then again, there will be much more demand for oil, and then oil prices will go up further from $120. So RBI would keep an eye, but then RBI will also have an eye on what the market rate of exchange would be. And based on that, it will gradually make adjustment. It will not make sudden adjustment. But these disruptions have come on a sudden. And you may recall, even in 90, when we had got into the crisis, the major reason, when, of course, we had a bad fiscal situation. On top of it, what happened is that Saddam Hussein decided to invade Kuwait, and the oil prices doubled. And as the oil prices doubled, everything, sort of your current account became problem. Rupees started flying out. So dollars started flying out, and you had only 3 weeks. The stock was just about 3 weeks import. Now, so obviously there are a number of issues there, but then the fact that it would raise the prices should not prevent us from getting our exchange rate right.
Way rupee is weakening against the dollar for a country like India, but we'll have to wait and watch what happens in the days from now. And also an important point that has been made, that what's happening with Indian currency is also the impact of what's happening in the global world. So we'll have to see how much more will RBI really intervene to stabilize the currency the way it is weakening against the dollar. Thank you very much, all of you gentlemen, for joining us here on Urban Debate on Mirror Now this evening and helping us understand what it means for the people of this country, this weakening rupee against the dollar. With this, we will slip into a very, very short break, but